Um, so in this video, I'm going to be talking about perfect entries and what entries are all about and how you can improve your entry game and have the best entries. Right. So entries now, like when as you see now, this is a setup now that I was looking at last week, right? So this is a trade that I actually took now, but then my preferred entry now like was here, right? So this was where I wanted to enter the trade now, which is at 75.572, right? That's where I would have preferred to enter the trade, right? But then at that specific point in time, I was not around the charts to actually monitor the trade and enter, right? So I missed the trade. So like most traders would be I missed my opportunity, whatnot, and they would now actually be chasing the market now and actually be looking for entries that are invalid now, and that will lead to them actually blowing their accounts or to them making losses that are very very unnecessary now, because as retail traders now, they are made to believe that actually retail traders now, like 90% of retail traders now, and I'm gonna go out on a limb now and say 90%, but then this is not an accurate stat. It's just something that I've seen from my own experience now, and from the people that I've met throughout my trading journey. So 90% of people, right, they think in a scarcity mindset, as in if you miss this opportunity or if you miss this trade, you won't reach when I'm that level, like like that they want to be at, when they think that if I miss this trade, what if this trade was the one that was gonna make me like millions of millions now, what if this trade was the trade that was gonna take me to from being a 9 to 5 worker to a millionaire? What if this trade was the trade that was gonna make me a lot of money? And honestly, nah, that's where they all go wrong, because there is no specific trade that will make you rich. There is no specific trade that will take you from $0 in your account to like $10 million. There is no one trade that will do that for you now. But like what can do that for you now is a collection of good trades that stack up over time, and you accumulating your wealth over time. That's how you get like to the level that most people want to I wanna that's how you get to the level that most people want to be at, right? Which is having tens of millions in their bank account, driving luxurious cars and just having a lavish life, right? So there is no specific trade that will get you that lifestyle. There is no one trade that will make you millions on millions on millions, right? It was always a collection of trades that lead up to your success story. So you shouldn't be worried that, oh, I missed this trade, missing a trade is okay, right? And that also ties in with the main message of this video, is that entries are really not that important. It's just you must know how to um actually, yeah, it depends on your trading style and how you approach the market now. So right now I'm going to show you how I approach the markets and how I make sure that I get the best entries, and even if like I miss an entry now, like I am not stressed about like I'm missing that trade now, because I know now my trading style allows me to miss like entries now and get in along the way in the trade. So I'm gonna hop like on the charts real quick. So like I'm right here now is the chart that you are seeing, like that I showed you earlier, right? Is the AUD like JPY trade, right? So as you see now, like it played out exactly as I wanted it, and like I'm currently like in a trade now on AUD JPY, right? So like let me quickly hide these things, right? So I can make a nice demonstration for you, right? So like retail traders now, they have this like scarcity mindset, right? That like if you miss this entry, like you won't make a lot of money and all of that, right? But then what is key is that you must first look at your trading style and know how your trading style allows you to take entries, and you must know how your trading style is best suited to work in your favor even when you miss your perfect entry, right? So like in this trade, right, my perfect entry would have been here, right here now. But as I said to you before, right, I wasn't around the charts to look and like monitor the trade, right? And this is like the whole setup now. So like this is the full setup, and I took this trade because like this was like a double top area, and it formed a reversal pattern right there, and I wanted to take it from here to here, right? So like that was the main goal. And you know, after like I came back on the charts, and I saw that I had missed this opportunity now. I wasn't mad because I know that along the way the market will always provide more entries for you to get in, and the market will always provide opportunities for you to take, right? So you see here like the market broke out, right, and here it formed a continuation pattern, which is where I originally entered the market, right? So I entered the market right here, and I banked about 232 pips, which is like 3.10%, right? And that was overall like a good trade, and I was quite proud of this trade because it played out very nicely and very quickly, you know. And you might ask, what if I had also missed that entry, right? Then like I still wouldn't be like that worried now, because I know that the market always provides, you know, the market always gives you another opportunity to enter. So me looking at this, right, on the smaller time frame now, this is a breakout and retest, right? So like let me go out and show you right here that you could have gone in and taken or took this trade on the smaller time frame, and this is where it's much more visible. There's like what's this like continuation pattern now. So right here on the 15-minute time frame, and like the 15-minute time frame is where I usually go to refine my trades and my entries when I have missed an opportunity. So this is where, okay, see, this is a continuation pattern, and as I said, like we missed the first entry, which was here, and the market broke out and it created a continuation pattern, which we took right here at the break. And then if we had missed that opportunity, we would have gotten in here at this continuation pattern, right? But this is a like a much more different like variation from like like the normal, what's this, like triangle continuation pattern, and you will like be able to recognize like these patterns with experience, and like you applying like discretion, right? Because with experience comes a lot more knowledge, because you would have seen a lot more things in the market, that would allow you to warrant like the setup as a variation, because like you can't like look for perfection in an imperfect market, you see. So you must always apply discretion, with like the setups that you take, because the market is never going to be perfect, and there is actually never a perfect entry for you to take, right? But then they are like those good entries, right? And you mustn't mistake them for now a perfect entry. There is no perfect entry, or there is no perfection in the markets, because the markets are imperfect themselves, you see. So like the general rule about like taking entries would be, excuse me, would be that like there are two types of entries, right? So there is a risk entry and there is a reduced risk entry, right? So like risk entries now, like entries taken from the top of the structure now, and like this is usually when like the market hasn't confirmed that the price is going to go in that specific direction, but you already know how this like type of setup is supposed to play out now, so you take that risk and you place the trade. That's why it's called a risk entry, right? Because you are not yet sure that like the market will follow the prediction, but through experience and the knowledge that you have, you already know that these type of setups play out in this type of way. So let me show you what a risk entry would have looked like in this scenario. So you see here, I'm going to go to the 1 hour chart. So we will start from where we would have originally entered. So here, right, it's how I would have taken this trade, right? So you see here, it's first touch, second touch, and then the third touch is where I usually like to take the trades. So here, this is some sort of hammer or pin bar, but like it's not that perfect. And then we got a big bearish candle, right? Which is the confirmation that I I usually wait for now, is that you wait for a reversal, and then after reversal now you wait for a candle that is going in the direction of the trade that you are wanting to take, or that you are looking for, right? So if you are looking for a sell opportunity, right, you wait for a bearish like reversal pattern, and then you wait for a bearish candle. If you are looking for a buy opportunity, you wait for a bullish like reversal, and then you wait for a bullish candle that follows that bullish reversal. So as I've done here, I've waited, and then I would have set my take profit right there, because that's where like I originally like aimed for. So here, right, that's where I would have set the take profit. So as I said, the market is not perfect. So sometimes it does consolidate, as you see here, right? And as I said, this is where the risk like comes in, because the market has not yet shown a clear sign that it is going to go in the direction that you have predicted. That's why it is called a risk entry now. And I'll repeat this again. Risk entries are like entries that are like taken from the top of the structure, and when the market has not yet confirmed the like true direction of the trade, or when the market has not shown like any commitment like to one specific direction, right? So risk entries are trades that are taken from the top of the structure, as you see here, which is where we're gonna take the trade here at the top, right? So that was a risk entry because we also risked the chance that the market could break out now, to the top, right, and then retest and then go up, right? So that was the risk, we were willing to take that. I wanna, even if the trade didn't play out now and it broke out and then it retested, then it went to the top side now, we were still going to be happy with the trade because we have tested this what's this type of pattern before, and we know how it plays out now. So that's why it's called a risk entry, because you are not yet sure, or the market has not given you a clear sign that it's now committing to one direction, and you are taking the risk by actually placing that trade without any true confirmation or commitment from the market. So I'm going to move on to the second type of entry, which is a reduced risk entry now. And a reduced risk entry now is usually when the market now has shown true commitment now to the prediction that you have made. So it is usually at the break of structures now. So at the breakout, right? So that would be a reduced risk entry, right? So a breakout and retest scenario would be a reduced risk entry, because now the market has shown you that, okay, we are going in this direction. So that's why here there's a break now, and I would have taken this trade right here because there's a clear break with a nice big red candle, which shows that, okay, now it's going to break, and then I would have placed the order right here, right? And I would have placed the order right here and my take profit, yeah, and my take profit right there, because why? The market is showing that now we are going to break, as I expected for the market to break this and go down. So a reduced risk entry now is when the market has shown some level of commitment to the prediction that you have made or the setup, right? So it's usually when the market is breaking out of a structure, or is breaking out of a support or resistance level, right? So I'll move on to this setup now and show you the risk, the risk and reduced risk entry here, right? So here now there is a resistance level now that is drawn here, right? So how I would approach this now, it would be a reduced risk entry now, because this is basically a breakout and retest here, right? So people who trade support and resistance only now would have been looking at this right here, because this is a breakout and retest, and then there was a reversal, which is this doji candle right here, and then there was a nice red candle that had formed afterwards, and then they would have placed their trade, right, and set the take profit right there. So for people who trade support and resistance, this would have been their entry, right? But for me, I approached it in a much more different way, but I would have gotten the same entry as the people who trade support and resistance, and let me show you how. So here you see I drew my pattern, right? Which is a continuation pattern. So the first touch, second touch, and then here this is the third touch now. So people who would have wanted to take a risk entry, right, which is entering at the top of the structure when the market hasn't shown any real commitment to the direction, right? That's a risk entry, right? So people who weren't who are willing to take a risk entry would have entered right here, and then would have set their take profit right there, right? So that's where the risk entry would have been, because it's at the top of the structure and the market hasn't shown any real commitment. And if the market wanted to, it could have easily just went back up and retested, then went up, but it didn't, right? So that's the risk that is involved with taking risk entries. So the reduced risk entry now would have been when the market has broken, and then you see here it's a break and retest, right? So I would have entered right here at the break because I already know where the market is going. So I would have just been waiting for a breakout of the level, or like the structure, and then I would have been taking a trade, and then I would have been setting my take profit levels right there, and I would have bagged like 225 pips. See, with a stop loss of about 30 pips, right? So you see, and now let's compare this to the other like type of entry that we talked about before, which is the entry that people who use support and resistance would have taken in this type of trade. So as you see, I would have gotten in at the same time the people who use support and resistance would have gotten in, because as I said to you, this is a like a resistance level and breakout and retest, and then this is the pin bar that they would have been waiting for, and then this is where they would have entered, and I had entered at the same exact place. So as you see now, I have showed you that even if you miss your trade opportunity now, and like the market has gone away from the entry that you would have liked them to take, right? Just relax and monitor the market and look out for other entry points, because the market is not perfect and you will not get a perfect entry all the time. So thank you. I hope you have taken a lot of knowledge from this video, and please subscribe and leave a like and comment below if you have any more video ideas that you would want me to make. Thank you.